Are you new in real estate, struggling in real estate, cash buyer, wholesaler, and you're looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet and analyze it for a cash deal and a creative deal. Whether you're just starting out or already seasoned, this podcast was specifically designed to give you practical tools that you can implement right away. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. When I created this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. This is the weekly deal analysis. Let's get into the show. Before we get into today's show, could you do me a huge favor and hit that like button? I really appreciate it and it helps the channel out a lot. Now, let's go analyze this property. This week's episode, we have a special request from one of our YouTube followers. They wanted us to analyze a property in Chambersburg, Pennsylvania, so that is what we are doing. We're going to take a look at 735 Basset Drive in Chambersburg and see, can we make a deal work on this, whether it's cash or creative. We got a special request from one of our YouTube followers to do a property in Chambersburg, Pennsylvania. We are going to look at 735 Basset Drive and see if we can't make a deal work out of this on cash or creative. Um, on the YouTube note, I really do appreciate it. Thank you for commenting. Thank you for watching. And it from the bottom of my heart, thank you. All right. Oh, goodness. I could see that it was peaking up already. 298 days on the market. What in the heck? You got a $14 HOA. It was built in 2006. One car garage. Obviously, we can see that. Only 105 views in, that's not even like a half a view a day. Ooh, I like this one. All right, let's look at the pictures. So obviously it was built in 2006 because we already said that. Could be one of the newest properties I've ever acquired. Most everything I've been buying is pre-1900 because it's old multifamily stuff. Clean, cookie cutter, you got your golden oak. Looks like a lot of golden oak. All right, what else? What else? I mean, you're definitely going to have your higher ceilings because it was a newer build. Wider staircases. I'm not sure what bath this is, but it does have a dual vanity, which is always a benefit. Looks like we got some hardwood under there. Yeah, there's some hardwoods in here. Hardwood through the steps, it looks like, and through the upstairs hallway. Typical yard, right back up to the playground. Oh, and they provide the floor plan. That's a beautiful thing. All right. Now that we've looked at the pictures, let's go look through the rest of the details on this and see if there's anything that jumps out. All right. Back on the market with price reduction at no fault of the seller. All right. So this one was sold and something happened and they're saying it was the buyer's fault. Could have been a bad appraisal, job loss. Buyers just decided they didn't want to move forward. Who the heck knows? It's not telling us anything crazy or spectacular in here. Let's see, property history. Property taxes are almost 4 grand. That's really high. There was, oh, duh, 19-year-old house. We already know that. They originally started about $10,000 higher. Oh goodness, they started almost $20,000 higher. So they bought this brand. Where's the '05 or where's the prior? All right, we're gonna have to look up the prior data or prior past history a little deeper once we get to the investness because Realtor's not telling us much. All right, so our analysis here. Uh, Quantarium is saying this thing's only worth $78,000. And CoreLogic saying it is worth basically what it's listed for, 244. Average in the area, median list price is 340. Average sale price or median sale price is 287.5 with about 60 days on the market. All right, 252. When did this thing sell? Very comparable. Sold in 2019 for 150. Wow. All right. Let's cruise through and just double check that. Oh, so they tried to rent, or they probably did rent this for 1750. Good for them. So that'll help us when we're working on our rental comp number. So keep that number in mind, 1750. All right, so this one didn't tell us anything. So what's this one going to tell us? 16. Do we have anything that has sold recently? And they rented this 2 years ago for 16. It doesn't look like a whole lot has moved around in here, but we're going to keep scouring and see if we can't come up with something. All right, similar homes in the area. We have a 208, a 240. This looks like more of a duplex, maybe a single. Not sure what this is. It's looking like a lot of the attached stuff is honestly closer down to like 200 range. All right, it's detached is asking 306. That's not telling me anything. Rentals, apartment, townhouse for rent. This is a 2-1 at, wow, it's really small. 2. I think our rental number is probably going to be, I think to stay on the safe side, we're probably going to say 1700 in rent, but I still haven't figured out what I think it's actually worth. So this one's at 18, a newer townhouse. All right, so it looks like the townhomes are trying to get at least 18. So we're going to stick with that 17 on the rent. All right, 1700 on the rent, but we still got to figure out what we're going to offer on this thing and what it's worth on the back end. I've not found anything in Realtor that is giving me one way or the other what I think this thing's really worth. So now we're going to jump over to the Invest Nest and see if we can't find some more details there. I've got it pulled up here on the Invest Nest. I love this site. It is very user friendly and it's really not expensive. I will have a code down below that will get you your first week for free and 50% off of your first month if you like it past that first free week. Give it a shot. I think it's like 40 bucks a month maybe, but watch me go through this and see, again, if you like it, try it out. And if you would, come back to this video and say, hey, I liked it, I hated it. It was good here, but it kind of sucked there. Just, I like feedback. All right, so they're saying it's worth what they're asking. This could be a good subject to property, depending on when they refinance. But if their estimated mortgage is 830 and our projected rent is that 17 that we're going with, could work out pretty good. All right. Owner details. If you skip trace, you can do that right here within the platform and they don't charge extra for it. This is not a property that I'm going to make an offer on. So that YouTube user who requested Chambersburg, um, click that link and try out the investment, see if you like it. So yeah, it was pending. Wait, didn't they say with a price drop of what, $1,000? Seriously? Did that say price drop? Back on the market with price reduction. Realtors. All right, so they dropped it $1,000. Still haven't figured out our pricing on this yet, though. Well, clearly it is not 245. At you know 2/3 of a year on the market, under contract once, and then backed out. It's not worth that. Or excuse me, my math was wrong. They dropped it 10. They did actually drop it. My apologies. And it still hasn't sold, so that's been June. That's been like 4 months. So it's not worth that either. All right, I'm gonna throw out a wild card and just say our ARV is going to be 225,000. Now, one of the things to keep in mind here, this is a what, '06, so this is a 19-year-old house. You need to inspect and pay very close attention to the HVAC, the roof, a lot of the major stuff because their lifespans on average are about 20 to 25 years. So we need to factor that stuff in, planning for the future as well. So I think we're going to say 225. I could be wrong. I don't know. There's really nothing to go off of here. And I don't know this market at all. So we're going to go with an ARV after repair value of $225,000. We are going to call this 735 Basset. Our purchase price on a cash deal, we are going to offer 70% of ARV minus repairs. So I'm going to pull up my calculator real quick. I'm not sure if that's going to pop on the screen. So we said our ARV or after repair value was 225 times 70%, 157.5 minus repairs. We're going to say there's going to be $10,000 worth of repairs. Because that's my guesstimate on what a roof would cost there. So we're just going to plan for replacing that roof. So we are going to offer our cash price at 147.5. 147,500. We are going to pay both sides of the closing costs, which is about 4%. Our lender is going to charge us 2 points, whether it's a traditional lender, a DSCR lender, a hard money lender. If you want to know what any of those terms mean, just drop a comment below. I'm happy to answer it for you. But that's basically how the lender gets paid. Improvements we said are 10,000, and we do want to roll those into our loan. We're going to put 25% down, and we want that loan term out to 30 years. We're going to leave our interest rate at 7. Let's make it a solid 7, not 700. That would definitely not work. All right, so we're going to say a 7% interest rate. Our rental price, we said we're going to stick with 1,700. And just to verify that, we're going to jump over and check on the HUD website to see where they're offering. I've got it pulled up here on the HUD website and very user friendly. I will drop a link below in the comments. But for a 3-bedroom, they're saying they will offer 1,591. So we're going to call that 1,600. And we're retail wise, we're thinking 17. Play with your numbers and always, always, always check with the local, whether it's a property manager, whether it's an agent. Just verify your numbers with somebody in that market. Property tax, that sounds right. We're saying 3 over here. What did this say over here? Yep. Oh, wow. No, that's not even close. 3930 versus 3. 3930. We're going to always go with a higher number. Insurance, I like to factor in $1,500 a year or $125 a month. Management is going to cost us 10%, and our tenant is paying all of the utilities, so we're not going to factor those numbers in. War chest or reserve, that's 5% for repairs and maintenance, vacancy, and CapEx. So 15% per month we're taking right off the top to make sure we are safe and secure as investors. We're going to factor in a 2% increase in our value, and we're going to factor in a 2% increase on our rental prices. We're going to plan to hold it for 10 years, and we are real estate investors. We don't pay full commission. All right, let's see what this thing looks like. Hey, if you're getting value out of this and you have not done so already, if you would please hit that like button for me. Now, let's see what this number looks like. Ew. All right, that's not negative like it has been lately, right? So for almost $50,000, you can make $37 a month. Not a good cash buy. And remember, we're offering a whole lot lower than they're asking. So let's go through this and see where everything falls. Cap rate is just under 7. DSCR, it works. Cash on cash, not even 1 point. This is the number I focus on the most, and it's cash on cash return. Really, what that means is how much money am I putting in and how fast am I getting it back? For me, I try to stay under 4 years realistically. ROI, it's almost a 10%, which again, it's not bad if you hold it for 10 years. 1% rule, if you follow that, it hits. And here's one of the things I love about the investment. It breaks all of these numbers down so you know where each and every segment of your monthly payments are going. Oh, and we did not factor in our $14 a month HOA. Let me go back and factor that. I had to jump back and add that HOA in there. I just flat out forgot. So no, for 47.6, you can make 20. This is a horrible cash deal. $22 a month on a $50,000 investment. No, thank you. So now we have all of our figures in here, and even to get to 10 years, our cash on cash return is only 5.175. And that's with rent increases and no insurance or property tax increases. Just not a good cash deal. And we're offering well below what they're asking. All right, let's do my favorite part and jump over and analyze the creative deal. This is my creative calculator. You can download it off of my website, christhompsonteam.com. Use it, love it. It's a free download. There's a bunch of other useful tools on there, and I hope you close the deal with them. All right, our ARV we're just saying is 225. Our purchase price on a creative deal, we're going to get a lot closer to that ARV. I still think that one's kind of high because of the age. And we don't know if it's got a new roof. We don't know if it's got a new HVAC. For me, those are the big ticket items like CapEx items. I think we're going to throw 200 at them and see what we can get away with. $200,000 offer. We're going to offer them 4% interest. And to figure out our PITI or principal, interest, taxes, and insurance, we're going to jump over to bank rate. I have it pulled up here on bank rate, and we're saying our offer is going to be 200,000. And on a creative deal, I'm only offering 5% down over 30 years, and my interest rate is going to be 4. My zip code up there is 17201. My property taxes are 328. And homeowners is 125. HOA is 14. Our principal, interest, taxes, and insurance plus HOA, because we threw that one in there as well, is going to be 1374. 1374. And our potential rents we are saying are 1,700. Ouch. Oof, that's crazy. On a creative deal, you're still losing. Now you're actually losing. So in this scenario, the cash deal was actually better. Let's see what we can get away with. Can we change this to a 2% interest rate? Let's try that. That might make the math work better. 1169. All right, so now we are making, I mean, that was almost a $300 swing. So now we're making $100 a month. And if we self-manage, now we're making close to $300 a month. All right, let's factor our other figures in here. Cash to seller was 10,000. Our agent commission, they're really not getting it done. So we're going to try to throw them $500 just to get out of the way. Assignment fee, we are not getting this deal from a wholesaler, so we're not going to factor that fee in. Closing cost is going to be that 4 points because we're going to be paying both sides. Our cost of renos, we're saying are going to be 10,000. 2 months of holding is just 2 months of this mortgage payment. There are no arrears, and a good transaction coordinator is going to be about 1,500 bucks. All in for 32, $33,000. You can make $100 a month. Still not a good deal. And it takes you 25 years just to get your cash on cash back. Well, excuse me, that's ROI. And ultimately, all that is this number or this number divided by this number. And that's how we come up with this number. Not hard. Not a good cash deal, not a good creative deal. I do want to send a big shout out to our YouTube follower who requested us to do one in Chambersburg, PA. Thank you so much for watching and commenting. We really do appreciate it. That is going to do it here in the Corner Barn on the weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll catch you next week.